So like I told you, is that carriage inward would form part of cost of inventory, while carriage outward will just be normal operating what? Expenses. So that's why I told you, Tring, you need to get the net profit for the year just like that, right? Then you know to get the net
Yeah.
profit, in the normal statement, you usually take the sales, we deduct the cost of what? Of
Okay.
sales, right? And then after getting that, we usually get the gross what? Profit.
Gross profit.
And after gross profit, we deduct the operating what? Expense, right?
Expenses. Yes.
Operating expenses, yes, that's what we do. So here we told the string trading is clickerly clocks, imports and resell clocks. He paid for the cost of delivering the clocks from his supplier to Switzerland, in Switzerland to his shop. That is a carriage inwards, right?
Yes.
Yes. So that forms part. So if he bought the goods for $10 and maybe he paid for transport of $5, that makes it a total of 15. It's like he bought for what? For 15. He resells the clocks to other traders throughout the country, paying the cost of carriage for the consignment from his business premises to his customers. This is the carriage outwards,
Outward.
which
Yes.
I've told you it does not form part of cost of inventory. Okay,
Yes.
On 1st July 20x5, the beginning of the year, the year ends at 30 June 2026. Yes, on 1st July 20x5 is the beginning of the what? Of the year.
Of the
He had clocks in inventory valued at 17. So that was the opening what? Inventory. And I
inventory.
hope you know how to get the cost of sales. You take the opening inventory, which we see
Yes.
is how much?
17,000.
75, right? 17,000. You are right.
17,000.
Okay, let me run this. So it's 17,000. Let me write 17 here. Okay. And then during the year to end at 30 June 2026, he purchased more clocks at a cost of 75. So you usually take opening inventory plus purchases, which cost 70 how much? 75, right?
75,000.
Yes.
Yes.
Carriage inwards amounted to 2,000. So this is what he pays the suppliers at the cost of delivering the goods, right? So carriage
Yes.
inward forms part of cost of that purchase. So it's how much? Two. So you have to add it there. You get the point there. So
Yes.
open inventory plus purchases with carriage what? Inward. Then you have to
Yes.
deduct the closing inventory. Sales for the year were this 162. So this is the sales. 160 what? 62 point what?
200.
One. Yes. Other expenses of the business amounted to 56, excluding carriage outward, which cost 2,500. These are just the other expenses apart from carriage outward, right? The value of the goods in inventory at the year end was how much? 15,400, so it's
15,400
15.4. So if you add them and deduct, you would get the cost of what? Of sales.
of sale.
Yes. So 75 plus 7, 17 plus 75 is 92, plus 2 is 94, 94 minus 15.4 is like 78.6. 78 point how much? 0.6. If you deduct 162.1 minus 78.6 is like 22 plus 62, 84. So it's like just like 83, 83.5, right? This is the gross what? Profit. So you deduct
Profit.
the operating expense. What did you want? Did they want? Compute the net profit for the year. Okay, this is just the net profit. So you can just deduct whatever cost. We are told here other expenses of the business were 56, excluding carriage outward. So we have to deduct both 56, but also the carriage what? Outward, which is
Outward.
2.5. Yes. So carriage outward forms part of these other operating what? Expenses. So carriage outward should not form part of what? Cost of sales. Just like that. Deduct and you get your value. Right. So it should be like how much? 56 plus
2,000.
2 is 58.5.
2,500 the net profit.
Net profit 2,000?
500.
No, no. Why are you saying that? This is 83.5 gross profit. This is 56 plus
It's
2.5.
3,500.
80.
It's 3,500, right?
This is a gross profit, yes. And operating
Yes.
expenses, we have 56 plus 2.5, which is 50. Okay, this is point, not 25.
Ah,
Yes,
okay.
yes. So
That's 2,500.
yes, yes. So this one it becomes
Okay.
58,500. So we'd have like 25, right?
Yes, 25,000.
25,000. Okay, this would be the net profit. So what mattered there is the arrangement. Everyone would get the same value because they would just say sales minus cost. But we are going to mark the line. Presentation. When doing financial statements, you have to be well at what? Presenting. Because the wrong presentation would give the wrong impression. You know, you have the financial
Okay.
ratios, right? Like let's say
Yes.
the gross profit ratio. And so if you take this carriage outwards and put it here under cost of sales, it would look like the gross profit margin is lower while it is actually higher. So you need to put everything in its respective place
Okay.
to give a better picture. Okay. So we need to finish this periodic. For this one they have no issue. I needed us to get something. Wait. Let's get something else. This people therefore no big deal. Okay, maybe let's deal with this little question here. We are told the following figures relate to the what? Relate to
Yeah.
inventory held at the year end, right? Inventory
Yes.
A, B, and C. Okay. What are you going to do now? You're provided with the cost, the selling price, the modification cost to enable sale, the marketing cost, and the units held. Required, calculate the value of inventory held. You know the rationale, right? Inventory should be
Yes.
carried at the low of cost and net realizable what? Value.
Value.
Do we have the cost? Yes.
Yes.
20, 9, 12. Do you have the net realizable value? Not directly, but we have the sufficient information, right? Because we said you take the selling price
Yes.
minus the cost to sell, right? So the cost
Yes.
necessary to make the asset ready for sale and the incidental cost of actually making the sale possible, right?
Yes.
So we have here modification cost to enable the what? The sale.
The sale.
Would have to deduct, but also the marketing what cost to actually sell that asset, right? So you'll have to deduct. So here we have the selling price of 30. I will deduct modification cost, which is 0, and the marketing cost, which is 7. So it will be 30 minus how much? Minus 7, which
7.
gives us how? 23.
23.
Okay. We go to asset B. I will take 2 plus 2, modification cost and marketing cost, which give me a total of what? Of 4. Then I will take
4.
the selling price minus the total cost of 4, which give me how much? 8.
8.
And then the same to inventory C. I will take the cost of modification plus the marketing cost, which gave me a total of 10. And then I will deduct this 10 from the selling price, which is 22,
Yes.
and have my 12. So as we said, you measure the asset at the inventory at the low of cost and net realizable value. My cost is how much for asset A? 20.
20.
How much can I get from selling the asset? 23. Okay, then I would say,
23.
okay, so I'm going to measure it at how much? At 20
That's
because it is
20.
the lower. So if you are speaking
Yes.
about double entries, I'm not going to adjust anything, right? Because
Okay.
my asset should already be at the cost. And so since I'm not going to adjust anything, so I won't have to put in to do any double entry. In case maybe you need to get the full amount, then you have the total units. So this was per unit like you have seen, yeah? Cost per unit
Yes.
here, the selling price per unit. So if you need to get the total value, you have to multiply by the number of units, which are 200. 220, you get for what? 1,000. Okay.
4,000.
On inventory B, cost per unit is $9 per unit, and net realizable value is 8, which is lower. 8, right?
Yes.
8 times 150, you get 1,200. You see the difference now.
Yes.
You could have said it this way. So in case maybe At first, maybe I didn't, in case maybe someone made an error, they didn't know that they have to measure the law of cost and net realizable value, and they just measured it as cost. What would have happened, right? It means they would have measured inventory B at 9 times how much? Times 150. 9 times 150 equals to 1,350, right?
Yes.
So they would have done. While in reality, they should have measured it at 8 per unit. And 8 times 150, if you have seen it, is how much? 1,002 what? 100.
200.
So you see that you're okay. I actually should have measured the asset at the lower value. So you see, okay, so I exceeded the value which I should have what? I should have used, right? By how much?
Yes.
By 150 if you deduct here. 1350 minus 1200, it's one how much?
150.
You see, this is like impairment now. So we do not apply a statistics impairment of assets, but we find it inside here. That's why I told you it has a direct resemblance when you compare cost and net realizable value, like when you compare the carrying amount and recoverable what? Amount. So you note that, okay, so I just made an error. At the year end, I actually used the cost, which the weight of which was 1350, while I should have used the net realizable value, the weight of which would have been how much? 1200, right? So
Yes.
I have to reduce the weight of my inventory. Inventory is an asset. An asset has a debit nature. To reduce it, you do what? You credit that
You
asset.
credit
So you credit the inventory by how much? By 150.
150.
Yes. Okay, if you credit the inventory asset, it means I'm going to debit something else. If I'm going to debit something of a debit nature, if it is not actually including another asset, which is obviously the case here, the debit you means having an asset or an expense, right?
Yes.
An asset or an expense. Otherwise, if you are speaking of the income or liability, it will be the reverse of them, which would obviously be evident if that is the situation of encountered. But you just know that okay, the weight of inventory is going down. It's not like I've sold the inventory to get the cash to get another asset. No, this is obviously an expense, right? So it should be an expense which
Yes.
goes to the statement of profit or what? Or loss,
Loss.
150. And usually you could find this under cost of sales, right? You know why? It touches inventory, it's about inventory. And then the income statement, inventory is deducted from cost of what? Is dealt with under cost of what? Of sales,
Of
right?
sales.
Yes, so you would
Okay.
see here it would be written cost of what? Of sales, and an
Of
adjustment would
sales.
be made there, right?
Okay.
Yes. So this is what would have done. What of inventory C now? Inventory C, the cost was 12 per unit, and the net realizable value is how much? 12, right?
Oh,
So no
yes.
change, right? Yes, no change. So
Yes.
I would take any, I would be indifferent in simple terms, and don't have to do any double entries. You get that?
Okay. Yes.
Okay, that's good. If
Okay.
you got that, that's good. So I've done this to show you that whenever there's a problem, you can do what? An adjustment. And that's why in
Okay.
accounting you do the journal entries, the general journal. This is its worth now. You presume that you have already prepared the financial statements. You can go back and start recounting the inventory, right?
Yes.
You just say, oh, I had forgotten this. So let me just plug this in my income statement and be done with it. It's for the previous, maybe the books of prime entry, I don't know, the ledger, the trial balance. I can go and adjust them there because the ultimate goal is to prepare the financial what? Statement. I've detected the errors after preparing the financial statement so I can start from afresh. So I'm just going to adjust my financial statement. Yes.
Okay.
Okay, so that would be fine. And they they usually avoid this. They presume that people already know about this weighted average method. I don't know what people. They presume that people know about this, but no problem. You at least have to get to get something, a hint about how to go about it. They are simple, of course, but you just need to get some hint, if not bad. Okay. Now, among the things which are usually also overlooked, this one, but you need to get the point here, right? Let's think of one thing maybe before going through this one. You know, there should be a way of measuring of actually measuring or determining the cost of. Presume you have flour. You know about flour, right? When maybe you have the
Yes.
maize and then you go to to those actually milling machines, for example, right?
Yes.
You may do something and maybe you may change their state. Now, if they're in such a state, can you count them?
No.
Can you get flow? You can't count it, but there are things which are countable. All right. So,
Yes.
in reality, you actually need to know how to go about that and determine the what? The cost. Right here, right above there,
Yes.
we just learned how to get the cost of something, right? Maybe you incur this cost, and this cost. But now we presume that you already have something as a company, right? And maybe you are using, there's
Yes.
something coming up, something going, something coming, something what? Something going.
Going.
And so you need to know how to measure those movements, to deal with those movements. So here we are. The cost of inventories should be assigned by specific what? Identification for their
Identification.
individual costs for items that are not ordinarily what? Interchangeable.
Interchange.
Things which are not interchangeable. There are those which are not interchangeable and those which are interchangeable, which we mean identical or very what? Similar. There are things which are not interchangeable. Something which is very identical, even if you interchange it, you won't even notice that if you have way of interchange. If you have the flow, for example, you interchange. Are you even going to notice?
No.
But maybe if you have things which are actually can actually be differentiated, if you interchange, you notice, okay, I've interchanged this one. But actually, since something like flow is not what? Interchangeable, right?
Interchangeable.
Yes.
Yes.
That's why we say we have to be assigned to assign the specific what? Identification. And for goods or services produced and segregated for specific what? Project. Okay. Let's go direct now about this specific identification. It means that specific costs are attributable to identified items of what? Inventory. You know that, okay, if I'm
Inventory.
speaking of flow, it's flow. I like about this part, but it is usually overlooked and they usually leave it. But it gives you the reality of how you have to deal with something in life, right?
Yeah.
You barely find this being talked about. So that's why you say, however, calculating cost on an individual item basis could be one rush. Of course, when you're told something is one rush, it's like there is no cost benefit, and the cost benefit it can be cost beneficial. It will just benefit one part. Maybe the auditor who wants to see, okay, I need to see how you have dealt with everything, every little thing of this flow. I need to see. Presume, okay, they would wish for that, but you can't do that. It will be to their own advantage, but on your side, it won't be cost beneficial at all, right? So that's why you
Yeah.
say for convenience now. For what? For convenience,
For
and this is what is
convenience.
done, IS2 allows the use of cost estimation techniques such as the standard cost method or the retail what? Method, provided that
Method.
that approximate what? Cost. This is what we expect. We expect that if we base on the standard cost method or the retail method, we're going to get the approximate what?
Cost.
Approximate cost. And that's what you can see about this standard cost. It's what we learned about, maybe the cost of conversion, right? The cost of material, the what. You see that?
Yes.
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 So you can now get the point now. Why don't we come and say, okay, I need to measure this flow one by one. So now we speak of the standard cost method and the retail method. Sometimes they don't like to say of the retail method. They just like to say the actual. You have to note about this.
Okay.
They like to use the word what? You would see that they like to
Action.
use the word the actual. That's why I feel like I'm complicating matters here. Because they usually take it very easy. They don't consider a lot of things. Yeah, like you have said, these are done. These methods, standard method or retail method, provided there is that approximate cost. So we expect this not to be so different from the reality, from the actual, right? That's why in some places we'll
Yes.
just be told as long as they approximate actual, we'll do it. Of course, we use them because they are reliable. If they are not reliable, we would have had to count the flow. Eh? Would have to deal with the actual cost of the flow. Okay. So about the standard cost method, he said that it takes into account the normal levels of materials and supplies. Like I told you, I think I showed you materials, labor, overhead, and I told you for production overhead, you would usually have the cost and the normal level of activity, which we divide. We even divided and obtained the fixed cost per unit, right?
Yes.
Yes. And so to use the standard cost method, and actually be satisfied, we say that the standards are regularly reviewed and revised if necessary to ensure that they approximate or resemble the actual. You see the way the actual here?
Yes.
That's why I told you. So sometimes you can be told, okay, we just deal with we just based on the actual cost. So
Actual.
someone tells you based on actual, but the question comes and they use the standard, and then you ask yourself, why are they saying actual? That's why I've actually resorted to this reality that we base on standard usually in the practice, but as long as it resembles the actual cost, right?
Yes.
And now as for the retail method, how to do the retail method, you need to know about the cost of the cost of inventory. How do we get that? Sometimes you may know the sales value of the goods. Let's say you know the sales what value, and we all know that sales minus what minus cost, we get the what the profit, right?
Cost of it. Yes.
Yes. For example, if you deduct the cost of sales, you would have the gross what profit
Profit.
minus cost of sales. Okay, I'm not writing the word gross here, but as long as this cost is cost of sales, this should be the gross here, profit.
Profit.
Now, what do we do now? Presume you have the sales and you need to get the what? The cost for all those items for at once. What are you going to do? It means I will say the sales and I would reduce my profit to arrive at my what? My cost. So we say this is often used in the retail industry for measuring. Do you know about the retailers are those actual business people who actually buy and sell in small quantities, right?
Yes.
Yes. So this is often used in the retail industry for measuring inventories of large numbers of rapidly changing items. Presume that you are doing that business. You have a what? A large number of
Large
rapidly
number.
changing items with similar margins. This is the point. First of all, we have a large number of rapidly changing items. So if you say that you need to measure one item after another, it means that it won't be cost beneficial. You'll end up doing the job and actually getting nothing out of it. You see? So we say,
Yes.
oh, we can't do this. This is just wastage of what? Of time. So what are we going to do? This is easy. It's no big deal. We just look. By being told the similar margins, we mean that okay, when you make your product, you state your profit as a percentage of what? Of sales. So you say that, okay, if I sold something for 100, for 1,000, right? What would be the
Yes.
profit? I just take 20% of 1,000. 20% of what?
Of 1,000.
Of 1,000, which would give me how much? 200, right?
200.
If you have 200,
No,
remember now, yes,
no, it will give
200.
you.
200, you are right. 200, right?
Okay. Yes.
So we would
Yes.
say that, okay, instead of determining the cost of one unit, and they are rapidly changing and they have a large number, you can deal with that. Something which is very large, and it rapidly what? Changes. So
Mm-hmm.
you just count the sales which you got after getting those sales. Let's say it's 1,000. You deduct the profit, and then you get how much? 800. 1,000 minus
800.
200 get 8, and then you say, oh,
Eight hundred.
this is my cost. This is what we do, right?
Yes.
That's why we say with similar margins, because in case maybe some take 30% of the sales, others 40%, others 25%. You won't be able to aggregate them and deduct and get the whole profit, which if deducted from sales would give you the total cost. So they should have the similar margins. So maybe you may group them.
Margin.
Okay, maybe the assets with similar margins, you group them together. Okay, the assets with 25% would stay their place. The assets with a margin of 30 would stay in their what? In their place. So you could have two categories. So you deal with the first one, you deal with the second, you get the cost for the first and the second, then you add them to get the total cost, right?
Yes.
That's why I say the cost of inventory is determined by reducing the sales value of inventory by the percentage of gross what? Margin. So you just deduct and you get your figure. You get the point.
Yes.
Okay, those were for non-interchangeable what? Items, which even if you do interchange, you won't notice the items which were identical. Now, what about for interchangeable items? Now, this is what people overlook. You know, someone may tell you, okay, have you ever heard of this FIFO and FIFO method? Someone may tell you, okay, I've heard of this FIFO or FIFO method, but they don't even what? Even know they apply to which items. You see this?
Okay.
Yes.
Yeah.
When we speak of already FIFO and ARFO, it means you may take this item, put you can actually separate the items, you can distinguish them. So whichever came first will have to be sold first.
Come out first or come out.
Yes. So now you have to get one point. The point here, you know, FIFO, you've spoken something, I need to elaborate it here. You have spoken of the word FIFO, right?
Yes.
FIFO just means first in, first out. So whenever you do explain, you have to put it into the context that you are dealing with. Here
Okay.
we are speaking of the measurement, right? And we are speaking
Yes.
of inventory, of course. What do we do? What do we do with this inventory? We buy it. For example, maybe I'm presuming we are not making, maybe we are buying from outside. The first to be bought is the first to be sold. You should not say again, whatever comes in first goes out first. We convert, right?
Yes.
Whatever is bought first is what will be sold what? First.
Face.
Because people has a lot
Okay.
of what you may find there's something called process costing, for example. Process costing, maybe you're processing products. So we can say in that case, maybe if you're using the FIFO, it is the first items to be processed are the first to be completed. By FIFO, when you deal with the process costing, we deal with items, we give priorities. Which items should be completed first? Because process costing takes some time. So which should be completed first ahead of others, right? So we say,
Yeah.
when we speak the word FIFO, we mean the first to be processed is the first to be completed.
Okay.
But here on this FIFO, we're dealing just this inventory to sell. So, okay, the first to be bought is the first to be what? To be sold.
To be sold.
Yes, right. So when you deal with interchangeable items, this is what we'll be doing now. We want to resort to those standard methods or what, right? When inventories consist of a large number of interchangeable, now these ones now are interchangeable. And they're also large number, but although they are not interchangeable, not like those uninterchangeable ones, right?
Yes.
If they're identical or very similar items, it will be virtually impossible to determine the cost on an individual item basis. You can deal with one item after another, although you would have liked to do that. Therefore, I still allow the following cost what? Estimation. So this is just a way of estimation. So we have the FIFO first in, first out, and the AVCO weighted average what? Cost.
Oh,
Okay, you have to note that IS2 specifically, there is something called last in, first out. Okay? In management accounting,
yes.
they still state it, but in financial reporting, we do not what? Use it. So never use it in financial what? Reporting, leave for last in, first out. It doesn't apply here, right?
Okay.
If you do it in financial reporting, you are going to face huge problems. So it's just this one, first in, first out, and weighted average method. First in, first out is just easy. Like I told you, outside of using this, we said that using this technique, we assume that components are used in the order in which they are what? They are received. So the components issued are deemed to have formed part of the oldest consignment. That's the meaning of saying first in, first out. It means, right? The first to
Yes.
be
Yes.
received or bought, maybe, or made is the first to be sold, just like that. So the first inventory to be received are the first to be what? To be issued.
To be sold.
Yes, what you received the first in terms of maybe you manufactured or you bought whatever you did, the first that will be issued, which will be what? Would be sold. Right.
Yeah.
And then you have this weighted average cost method. This now we presume all the inventories to be the same. We don't consider they are aging, right? So each
Yes.
component in inventory at any moment is assumed to have been purchased at the average what? Price.
Right.
Because remember, this item has its own price. When you say first in, first out, it means those items are already distinguished. So each one stays with its own price. But as for the average cost, like you have seen, we don't be based on the actual cost of those inventory because we presume them to have the same age, so you can't differentiate them. So you will use the average method. We use the average cost, right? Okay, then what do we do now? Under the ASCO method, you can have two ways, right? You can have the perpetual or continuous method, or you can have the periodic what? Periodic method. The perpetual or continuous is like whenever you receive a new consignment of inventory, it means you will have to redetermine the average cost because I've said that we'll be having the average cost or the average price of the inventory, right? So
Yes.
whenever you receive a new consignment, you have to recalculate the average what? Price of your inventory because it,
Right.
it could change, right?
Yes.
Yes. And that's why, but if it is periodic, actually, you could say, okay, maybe I'm dealing with it on a monthly basis. Okay. So it's just like that. Maybe you can just look a bit about periodic weighted average cost and the continuous one. I think you've also spoken about it. When we speak of periodic, let's deal with continuous first. Periodic, it's easy. When we speak of
Yes.
continuous weighted average cost, we say the revised average cost per unit is calculated following a purchase of goods. As I've told you, whenever you have a new consignment, like I told you, it's when you recalculate it because it's when the cost would change. If you haven't received any new product and you already calculated the average price, it means you don't have to calculate the average price again, right?
Yes.
Yes. That's why the cost of any subsequent sales are then accounted for at the weighted average cost per unit. So simply speaking, you get the average cost of inventories as long as you receive the new what? Consignment. Whatever new consignment comes, you do it. But look for periodic average cost to see how easy it is now. It just says the average cost is calculated based upon the cost of opening inventory plus the cost of all purchases made during the accounting period. This one would be simple now, right?
Okay.
You'd not say that, okay, whenever a new inventory comes in, we recalculate. Whenever new, no, it's easy. Maybe you say, okay, I'm going to do this maybe over a period of six after every 3 months. So you wait. Whatever comes, you get them, you get them, you get them. Then after 3 months is when you do what? You do the calculation. So it will be
Okay.
easier. Yes. It becomes easier. Things like this should have to be transformed using IT systems. They should be automatic. You can tell someone do this. Not LIFO last in first out formula is not permitted by S what? S2. So LIFO could still be used for management purpose. Management purpose, we say for internal decisions of the company, but not for external
Mhm.
reporting. You can't hear this to stakeholders, right? And financial
Yes.
reporting is very wrong. Okay, how do we gain from the weighted average method now? What can you say you can gain from weighted average method? We say that weighted average method combines the prior period price with the current one to get the average, you know that, and so does not cause any fluctuation in the issuer price. So whenever someone
Right.
comes to buy, you just give them the same price. They would have the same one, the same price. So it would be fine to customers. But
Mhm.
also the issue price needs not to be calculated unless a new lot of material is received. You have spoken about this again, right? That the
Yes.
average price remains the same unless a new consignment is what? Is received. And for the disadvantages now, we say material cost price does not reflect the actual cost price. This is real because we deal based on average, right? And
Yes.
conditions
The
differ.
combination.
Yes, you might have some conditions which are maybe, sometimes the prices are high, sometimes they are low. So if you just based on the average, maybe you could also encounter some problems. That's why now people has its advantages. But I think people is the best. Is the best. First of all, it is easy to operate and understand because just say whatever comes first will be sold first. There is a distinction.
Yes.
We do not combine. But also say in the case of falling prices, this method gives better results. This is true too, right?
Yes.
Yes, in the case the prices have fallen, so it would give you better results. But number three says the closing inventory of materials will be very close to the current one. Market price. You
Right.
know why it would be that way? Because the market price changes every time, right? So since
Yes.
FIFO method tries to eliminate the earliest bought or the earliest acquired materials, it will be trying to eliminate it will be trying to minimize the duration, right? The time
Yes.
gap between the current time
The
and what they
repairment.
have.
Yes.
Okay, so this one will be fine. And number four says material cost charged to production represent the actual cost with which the cost of production should have been charged. Yes, because it's real, right? Whatever
Yes.
you actually incurred is what will be shown. Disadvantages now, we say that if prices fluctuate frequently, this method may lead to clerical error. Of course, maybe if we have a lot of changes now, this is not the price, then the price, you might find it confusing, right? The good thing about
Yes.
average is when you get the average price, it is the same. But right now we have the system. So if you have the system, there won't be an error. Okay, now recognition as an expense or impairment reversal. Yeah. Simply speaking, I don't want to speak a lot about this. Some people do not expect to speak about this. But I'm actually not going to speak about this. I'm putting a cross. I have my own meaning. I'm putting a what?
Across.
A cross. I need you to go and read about impairment of what? Inventories, right? Like I told you that when you deal with measurement of
Yes.
inventory, you make reference to what? To the impairment. Like I showed you how related
Yes.
they are. Yes. Okay, so the last thing we'll be having is we just see how to compute the cost of inventory using the FIFO and what? And AVCO
Average.
as I've shown here, after which we will be done. You can just come later and try this question. It's not bad. I put the solution here. You need to go, you come and try to see. Ask yourself, okay, what am I going to get? You see, those cost of products, the import duty, the taxes, you have to see this. It will be fine. You can see about those carriage ones. I put it here intentionally, apart from the first one, right?
Okay.
It's just the same
Yes.
like that one, but the first one we did was having carriage inward and carriage what? Outward.
Outward.
Here it is also having, but we can see some nil values. So I need you to go through this because I believe it is going to give you kind of an edge, right?
Yes. Yes.
Yes, so it's better that you later come and deal with this one. So what we're going to deal with is we're just going to deal with these two questions. Just kind of a bit of an illustration. It's not much, right? Not much.